You're going to hear me talk about futures, the futures market specifically. So what on earth are futures? Right. Like, what are futures? You know what stock is, basically. Great idea, turned into a business. Business gets profitable, needs a really big loan, a big one-time influx of capital to do great, amazing things and innovate for the next 200 years in America. They go through a process, S1 documents completed and put together all that stuff, and certain banks underwrite a big loan. Facebook, for example, I think had 33 banks that underwrote or were the underwriters for the loan, right? And then the company will go public and you can buy shares and you can be a consumer, but you can be an investor and actually own a piece of that company at the same time. As that company does well, you do well. It's simple, it's great, it works, it's capitalism at its finest. You gotta respect it because you buy stuff, so you gotta respect it, right? And so that's the stock market. You get the stock market, but what are futures? So here's a simple example. Very practical. So if we went back to like 1600, feudalistic Japan, let's say, and I'm not Japanese, although I might have some Japanese in me somehow, somewhere. Let's say my dynasty fought your dynasty and we won because we were warriors, right? And we won. So what we would do is we basically would take over all of your crops and all of your resources. And then let's say we're talking about rice specifically, right? The wet season would come, we would, plant the rice, grow the rice, harvest it, all that great stuff. Let's say you came to the market one day and you wanted to buy I don't know what it's called for rice, let's say bushels. You wanted to buy 2 bushels of rice, right? And we had sold in the market most of that rice to my dynasty, people who were from my dynasty. And you guys, we didn't really, y'all had to wait, come second, right? Because we just beat you in war, yada, 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 right? So in this market, though, you would come and you would say, hey, I want to buy 2 bushels. And we would say, hey, we don't have any right now. But what we would do is basically take your money and write you out a receipt. And that receipt would be a contract. You pay today a certain price, what's called a market price, whatever it is. Right now is the market price, big word, which just means whatever the price is at the time you buy it. And you basically were given what was considered a futures contract. Why? Because you're going to come back and get the rice in the future. Right. So here's a more practical example. 2016. Let's say you want to buy. No, you just moved. You just moved to Atlanta. Hey, just moved to Atlanta. You're like, hey, you called me. And you're like, hey, who should I use for my internet provider? And I'm like, oh, you should go with a bundle pack. There's like 2 or 3 companies that you can choose, right? So let's say you call one of those big companies, big telecom companies, and they say, hey, guess what? Right now we got a 3 bundled pack, internet, cable, phone, and it's $199 a month. And you're like, oh, $199, okay. You call back a month later, and now they have that same special, but it's a 12-month contract, and it's only $109, right? So it's $90 less. If you decide that you want to partake in that and you want to sign up and sign that contract, you're going to get that price every month for 12 months, minus all those little hidden fees. But anyway, you'll get that price for 12 months. And essentially, you're going to receive that service in the future. So you signed a contract for something that you're going to receive in the future. So last example, hopefully this makes sense too. Last example about the futures market, and I'll make it really, really plain. If you're, let's say, a big company like Tiffany's and you sell millions of diamonds and products and all this beautiful jewelry, one thing that you actually need is silver. So at some point, somebody somewhere in Tiffany's, there's a trader who's actually trying to buy silver, who actually wants silver delivered to a plant that they're going to take, mine it, create jewelry, and you're going to buy it. And that's going to move their stock price. The more people that buy, yada, 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 profits, all that great stuff, right? So this concept of a futures market, futures are essentially, compared to the stock market, it's like the stock market on crack. And here's the thing, the buying power, it's the buying power. So let's keep an example really, really simple. If you had 1 share of a company like Tiffany's, for example, 1 share, what's the smallest amount of money you can make? It's a penny. If the stock moved the smallest incremental value that it actually can move, that's 1 tick or 1 penny. So to make a lot of money, clearly you need a really great move where we go from $1 to $99, but normally that takes time. So you need a lot of shares. You want to grow and accumulate, a lot of shares. But you also need time. You need that you need to give the economy time to really value and evaluate that company, and for that company to really grow and do well, to make a lot of money, right? A lot of money. In the futures market, it's a little bit different. So for example, the futures that I trade is called the Russell 2000. You know what the Dow Jones is? Big, broad market index. It's like the all-star team. The Russell 2000 is like the young, wilder brother. It's a little more volatile, a little crazier, you know. Small cap, mid cap, 2000 companies. Don't even worry about that. Small cap, mid cap. Block that out of your mind. I don't want to confuse you, right? Dow Jones, 30 companies we all know and love. The Russell 2000, 2000 companies that are, you know, they're a little bit earlier in their growth, right? So they're not these big monolithic companies that we all know like Apple. They're smaller companies that haven't gotten to that level yet, right? So basically, when it comes to buying power, the buying power is where the money gets pretty stupid, pretty ridiculous. So the Russell 2000 futures, basically, each tick, smallest incremental value, the smallest amount of money I can make by trading, buying or selling Russell 2000 futures is not a penny. It's $10. So you do the math. One tick in stock market with one share is 1 penny versus one contract for one specific future, and that specific future, every future is different, right? So the tick values are different, but the Russell 2000 is $10. That's 1,000 times the buying power. So essentially what the futures market is it's a way to get 1,000 times the buying power of the stock market, but you don't have to put up as much money. So I don't have to have $700,000 to actually be able to play and trade as if I had $700,000. The contracts have a specific cost. So I won't name any brokerage firms, but there's one really big broker that like kind of specializes in futures. Everybody knows them and loves them. I'm not going to say their name because I don't believe in free advertising, but their contracts right now I think are about, let's just say 6,000. It's like 59, 40. So essentially, if you're able to put $6,000 in your account, it's as if you have 600,000, which is where the buying power comes in. Every tick you can make, you catch a what's called 1 point or a 10 tick move, you just made $100 on one contract. So what do day traders and people who professionally trade and get into this, not as a hobby, but to make money and to live a different type of lifestyle? We get into this to be able to make money consistently on a day-to-day basis, a week-to-week basis, if you're like a swing trader, which just means you're holding positions a little bit longer. And yeah, it's pretty amazing because the math can get really crazy. So if you can become really, really good at just being able to have a strategy that works, and there's only one way to trade, but that's another video, and you can make 2 points a day on the Russell 2000, that's $200 on one contract. 20 days in a month, if you average 2 points, that's $4,000. You're doing pretty well. Here's the thing though. If the first year you can do 2 points with one contract, what if the next year you get to where you're doing 10 contracts? Now you're making $2,000 a day instead of 200, and instead of 4,000 a month, math jumps up a little bit. So needless to say, futures is a totally different ball game. As an investor, you know some basics and you know some core fundamentals that every market sort of responds to, and you know, support prices and resistance levels, and you know, if we start talking about all these complex things, Fibonacci retracements, moving averages, all of those things work in every market in terms of the analysis, right? So you can do the same analysis, but futures is really for people who want to approach managing money as a profession. It's not just about the money. It requires a significant amount of capital. We don't want to say significant, but enough capital to start, and that depends on which broker you use, yada yada. But it's a different level. It's a different level. People ask me about futures and I give the disclaimer. Most people who go into this and who do not approach it like I'm totally changing my profession, you probably are going to lose all your money. It's just the reality of it. You'll make some money here and there. You'll feel like, oh, this is easy. You'll get into some bad trades. You'll develop bad habits. You'll probably lose all your money and never trade again. And you'll then rule out the stock market or rule out futures as something that's doable because you didn't approach it the right way. So needless to say, I'm actually working on a coaching program. It'll be partial class, online education, but then you'll actually spend some one-on-one time with me. And I'll be teaching people to do exactly what I do. Those that are ready, and there'll be an application process. But hopefully 2017, I'll be able to kind of bring that to the world. And, it's going to be an amazing, amazing, amazing class. And it will come with a premium price. But if you think about what I said and the type of money you can make, the return is pretty easy. I mean, if I charge $10,000 for it, that honestly would be cheap. So, because you can make that back, especially with great strategy. And there's only one way to trade. One way to trade that fundamentally works on every single asset you can think of that has a chart, period. I don't care what you hear. So anyway, hopefully that helped. I know that was a lot to digest, but futures is just, I love it, man. It's a different market. It's a different level. It's almost, and this is weird to say, but it's really like a legit video game. I mean, think about it. You're at you have to download a platform, PlayStation. You have to download a platform to actually access it. You're trading off of charts or technical analysis. And all that means is you're looking at information and data in the form of pictures. You're drawing lines on the screen. I mean, it's no different than if you walk into your child's bedroom and you sit down and play a video game and they have to teach you, well, these words mean this and this is a story. And it's like a whole different world. And it works that in whatever way it was designed to work because the creators of it made it to work that way. It's the same way with futures. Some people say, well, why can you get such crazy leverage and buying power? How does that make sense? It makes sense because they made it to make sense. Don't worry about why it makes sense. It makes sense. You're either going to learn how to trade it and you want to go that route, or, you're going to stay an investor. You're going to do really well. And, you'll be a smart, active investor in the stock market, which is cool. Futures is definitely not for everybody. It's just not. So, yeah, it's not. And I'm going through a lot. I started really strong. And then, I had a few years where it was just, building years. The Greece, that economic debt crisis was really tough. The volatility was high. Ooh, it was high. It was high. It was high. So trading was, and it's a journey. It's a journey. It's a different profession because every day you get a performance evaluation. You either made money or lost money. It's like having a boss over you, watching you every single second. I don't think any profession is more intense or more rewarding and more freeing than being able to trade. You wake up, you make money in your pajamas, you're pushing buttons on a computer at the end of the day. You don't have a boss, you can do what you want, you can go where you want. There's some amazing benefits to being a professional. And even when I said the whole pajama part, I mean, there's guys I know who have been traders for a while. So yeah, when you get to a certain point and you just know you're confident and your capital is growing, yeah, you can trade in your pajamas. But don't start off doing that. You get a little too relaxed, which brings a whole ego, and then you get too cocky, and then you just take bad trades and you start losing. So I don't want that to happen to you. It happens to all of us. But yeah, so hopefully this has helped to expand your knowledge on what the futures market is. It's amazing. It's amazing. That's all I can say. I'll talk a little bit more about it in other videos, but for now, that's it. For more information, free courses, and to register for Limitless, simply log on at limitlessclass.com and make sure you check out the register video, which goes through all the details of the course itself. Or just click the link below. That's it. And as always, from the bottom of my heart, I appreciate you for watching. Share this video, educate somebody else. Let them know there is an amazing, amazing class for people who are ready to start investing. It's called Limitless. My name is Noble Woods. Limitlessclass.com is the website. And I'll talk to you guys later.